What's going on, guys? Today we're going to be doing a prop firm review, and then I'm going to go over a winning trade that I took and how I confirmed it using order flow. Elite Trader Funding is a prop firm that I've reviewed on this channel before, and they've partnered up with me again to do a giveaway. So I'm going to go over and show you what their changes are, and then to do the giveaway, they're going to be giving a DTF account. It's a direct to funding account. It's their most expensive and most valuable offering, so one lucky winner will get chosen and we'll get you set up with that. The same giveaway rules apply as usual on this channel. You have to subscribe to this video, comment down below, and then follow me on Instagram. In 30 days, I'll use a random comment generator to pick a winner, and then I'll go ahead and message you on Instagram and get you set up with that account. The link to follow me on Instagram will be in the description down below, as well as a link for Elite Trader Funding. You can use code Fulltimetrader to access a 50% off discount, and it'll match whatever discount they have going on. So let's go ahead and take a look at Elite Trader Funding, and then I'm going to walk you through my winning trade that I took, through my pre-market plan, what I saw that made me hit the buy button, and how I confirmed it on order flow. Let's get into it. All right, guys, now let's look at the ETF updates. So the last time I made this video was a couple years ago. The main things that they've changed now is that they removed many risk rules. They allow VPN, HFT, dollar cost averaging, and martingale. You only need 8 active trading days to request your first payout. And then they got rid of their 90-10 split. You keep 100% of your profits unless you're moved to live. And then they issue reward boards for new users. And then they used to pay out on Wednesdays only, and that's gone now. They review and approve payouts within 48 hours. And if they don't do it in 48 hours, then they give you an extra $1,000. And then they've beefed up their customer service, and they reply within 30 minutes. They've increased their staff. They're more available around the clock. So they've kind of just improved their business operations as a whole and kind of sweetened the deal for traders. So their main evaluations, and now this is going to be the giveaway. It's the DTF account. It's direct to funded, and you skip passing the evaluation and you directly begin trading on a SIM funded account, which means that you can start earning profit right away. The reason that these are so expensive is for that reason. So the winner of the giveaway is going to get a direct to funded account. They have one-step evaluations, intraday unrealized profit, trailing drawdown. This is going to be very similar to your Apex, to where you got to watch your drawdown. It's going to trail intraday. What I would recommend and what I like is the end of day drawdowns. They're a little bit more expensive, but you get what you pay for. You have an end of day trailing drawdown, so you don't have to worry about taking profit. If you're in a trade and you're up $1,000 and, for example, it comes back down to break even, your drawdown doesn't move. Whereas in the trailing drawdown, you just lost $1,000 off of your drawdown. So I like the end of day evaluations. As I always say, it's a big green flag for prop firms to have these, because it's more to your advantage, and it's more like trading in a real account. Like for me, when I'm trading my live account, I don't have to think about a trailing drawdown or taking profit. Like if I am up on a trade and it comes back down and stops me out break even, nothing's happened. My account is just where it's at. But in these accounts, you've burnt off some of your drawdown because it trails. So I like the end of day drawdowns. They have a fast track where if you're confident in your skills, you can hit your profit target quickly. You can pay less and fast track yourself. And then they have a static drawdown. What this is essentially, for example, we'll look at this 50K account. Your profit target's 4,000. It's higher because your max drawdown is 2,000. So pretty much it's static at 48K. So if you made $1,000 in this account and you were at 51,000, your drawdown would now be 3,000. So it's a static. I mean, it stays where it's at 48K, and your account can't go below 48K. So the more profit you make, the more wiggle room that you have. So if you're up $3,000 in this account, you would have $5,000 of drawdown, and then your profit target's 4,000. So those are kind of good, because as you make more profit, it kind of gives you more space, and that's easier to like size up and stuff. But there's also a reason why. If you notice, you can use 4 minis max on this one, but when you come to the end of day drawdown on the 50K, you can use 8. So you reduce the amount of size that you can use, which I think is not a bad thing, because if you're on a prop firm, you probably don't need to be trading tons of size anyway to begin with, but that's not necessarily a bad thing. And then their diamond hands is where you can hold overnight and weekends. It's like their swing account. I've never really messed with a swing prop firm account, but your max size is 2 contracts. And if that's something that you're privy to or into swing trading, then they have that option for you. So that's kind of like their evals. I'm going to go ahead and go over my trade that I did today to just kind of give you guys value and give you guys some education on how to properly plan a trade so you can pass these accounts. But I always recommend just kind of going through the FAQ and understanding all the parameters and the rules of the account that you choose so there's no surprises. Know your drawdown, know your profit target, know if you're end of day or trailing, and just kind of know all your metrics and like what the rules are so you can perform at your best and there's no surprises. Okay, now I want to go over a trade that I took today and what I was looking. So my pre-market plan off the rip this morning was CPI move pushed us up past the 64.35 big seller level from the FOMC week. And now it's kind of coming off a bit. The low volume node formed on that push in this area right here. You can kind of, call that, maybe like a fair value gap, as they might say, but I was looking at the low volume node on the depth of market, but that's your low volume node area. That's your low volume node area. And there were zero prints down here at 64.15, and I was watching for this area to fill and hold for higher. All right, I posted this at 6:22, about 8 minutes before the market opens, when the market looks like this. This is what the market looked like when I'm making this plan. So I didn't know what was going to happen next, but I had this low volume area and I had those zero prints. And a move into 64.15s that stays above 64.11. I'll look to long back into the 64.25, 64.35 level, and then fail 64.11. I'll look to enter short, targeting the Globex low. So where did I get 64.11 from? It was simply overnight high right here. So this was basically the pivot for the week. And you can kind of see over in this area, it was, if I were to extend this to the left, you can kind of see how it's been kind of like a confluent level already. So that was my trade plan. We came down into this level. I'm going to show you what it looked like on both the footprint and the Bookmap. So I was posting, still watching for the 0% at 15 and a hold, long to be a pullback, not thinking about shorts until under 411. So I knew that I really don't want to think about going short unless we can kind of get under this like key level and through this low volume node on the CPI push. So we came down into this level. I got long on this candle right here on the bounce up of 15. And I got in long at 15,702. You can see down here. Zoom in. I got in right around here. I got in on this candle right here, 702. So we got that bottom heavy footprint, which I'm going to show you in real time, the footprint, like what I saw and how it shifted and move up above the key 11 key level. And then it held that 15 zero print area. And then it has to hold 20. I got out to 25 for 10 points. 25s was the Friday close. And I was talking about, I was thinking about shorting until I saw that footprint shift. So right here, when the market kind of looked like this, I was thinking about maybe this is going to like kind of break underneath 11 and come down and test lower. And then when we bounced, that's what made me shift my viewpoint. So I'm going to show you the footprint first. This is a few minutes before I got in on that bounce at 11. So here's 11 right here. Go ahead and just kind of put this zone. There's my 11 level. And this is sped up a little bit. You can see the time right here. So I got in at 702. So I'm thinking about short. We can see the delta change down here, right? It's negative 700 and then it's starting to kind of go positive. So that's just something to kind of watch when you see these delta shifts. Like we were going up and then it shifted right here and then it came back down. So let me slow it down. So we come into 11, all right, we go under. I'm thinking, all right, is this going to roll over and die? And then look at this footprint, how it forms. See how it starts to go up? You get this bulge, this like low volume, or this bottom heavy footprint, as they call it, where most of the volume is at the bottom, building volume. That's how you want to see for like a low to be formed. Then you see this delta. Look at it forming, minus 154. We're trying to pop up. We're going to watch this footprint. I'm not in yet. I get in at 702. It comes down again. It's growing 177, minus 191. And this is like 2 speed. I'll go down to regular speed for you, minus 202. And then it starts to pop up. So the sellers grew at the bottom, and then this thing shoots up. And we have this like bottom heavy footprint right here. So that's like aggressive selling to me at the low at my key level at 11. And then it comes right up after this. And then I'll put my cursor here at 15, which is where I got in. Then the next footprint opens, we shoot up, and then It's 7:02 now, so right here in this time frame, in the next 30 seconds or minute, I get in. It comes down to 11 again. I get a hold. All right. If their sellers are here, it's going to continue lower. It's going to make a new low. Boom, pops up, and I'm in long here at 15, going for my target of 25. On this bottom heavy footprint, on this hold, on this push up, at my key level. Again, I'll stop it. My key level is here at 11. We have the 0 print at 15. And this is what the 2-minute candle looked like. You can see the hammer and the aggressive buying from the candlestick alone too, but the footprint helps confirm it. It came back down and back tested 11. It held and it went back up. And this was my entry point. And I was comfortable putting risk on at 15 up here at this area after seeing this footprint form. Now, Bookmap, here is 6:59. Just before, I'll kind of like let this one play out. It looks a little different. I didn't really see too much on Bookmap on this particular trade, but I'll speed this up. We had this bounce already here at 11, and then there's a bid right here. The bid gets filled, and then we pop back up. And then another bid comes in, that bid gets filled right here. You can see it, and then it kind of holds. So I'm watching Bookmap again. My stop's under this low. I like this bid getting formed. And let me just rewind it for you guys, because I already know people are gonna be like, I missed it. I don't know what you're doing. I don't know what's going on. All right. All right. I'm gonna stop it. I'm gonna go to regular speed when it gets to 7. All right. You can see the 11 level. We come down. Here's regular speed. Here's a bid right here at 09. Gets filled. All right, we have the double bottom. All right, it's a bid from the original bounce. Comes down and then it starts to pop up. I'm looking at that footprint form as well, but this is what the Bookmap looked like, just so you guys can kind of see how the trade formed. They're selling at the low. Buyers come in and try. There's that bid. Boom, bid gets filled. Actually, yeah, it gets filled because you can see the line in there. Bid gets filled again. Aggressive selling. That was that second footprint that you saw at 10 when it went from like minus 150 to minus 200. That was that aggressive selling right there. I'm going to pause that. You can go back and rewind the video, but this minus 202 here at 0950, we saw it. It was like minus 150, and then I said it was growing. That's exactly what Bookmap, that's what this bid getting filled is. There's a bid here, and then there's an aggressive seller, 139 contracts sold at the market, fills this passive buyer, and then that is what you're seeing on the footprint chart. It's just showing it in a different way. And then you get that pop up into 15. You can see there it is down here again at 0950. That's growing again. I can speed it up here. I'll go like 2 times just so the video is not too long. And then it's starting to pop up. And then 15 is right here. It's 702. And then boom, aggressive buying comes in. I'm in right there. See how you saw those big bubbles form right at 15. I'm in at 702. That was my entry. So I can see the buying form on Bookmap in real time after these bids are getting filled. At my key level at 11, it already kind of bounced here before. It basically swept the low by like a point, which is something you see in the market a lot. Everyone that got long on this little push right here, they probably had their stop at 10, right? 64.10. This just goes right under. That's like a stop hunt. Traders get stopped out, provides liquidity for buyers. Boom, this comes up, and then we get the real move into the rest of the day. And I can tell you, I wish I would have held this and held runners, because boy, did this thing keep going. I mean, I got out in like this area right here, and it just kind of kept going the rest of the day. And I didn't know it was going to be a trending day. You never know. It's been summer price action. It's been kind of back and forth, up and down, consolidation days, low volume. Some days were in a tight, like 5 to 8 point range. So when I got 10 points pretty quick at kind of a key level, I was okay to take it off. I just didn't leave any runners today, and it kind of just kept going up and up and up. And you know, that's what happens, and you can capitalize that on leaving runners, but I like to just take the bulk of my position off because you never know when it's going to be like this. You can take this same trade on the next trading day and you try and hold it for longer, and then it kind of does what this does. Like you get in, it goes up 15 points and then it just rolls over and then comes back down to your entry. And the way that you avoid that is to take profit and take the bulk of your profit. I think it's okay to hold runners, but the way I trade is, especially if you're on a prop firm, is I like to take the bulk of my profit off at my profit target, and then maybe hold runners if I have or if I can. If you're trading one or two contracts, it's kind of hard to do that. And I think, especially if you're trading like one mini or two minis, I think you should just take the full profit at your profit target and then be happy with it. You know, we can never catch the full move. I didn't have any FOMO on this move afterwards because I followed my plan. I mean, this was a textbook day. I had a pre-market plan. I mapped it out for you guys beforehand. I had my key levels, why they were there, and then I executed on it, and I used order flow to confirm my entry. I talk about this in my order flow series. For those of you that haven't seen it, I would suggest watching it on my channel. I go into an in-depth whole, step by step on the footprint, the DOM, the heat map, and my trading process. And I just put out another video on order flow strategy, like a kind of more beginner overall view. So definitely check out those videos. For those of you that want to learn more and get more in depth, we have our Full-Time-Trader program, which gives you access to the Discord, where I post my pre-market plans and intraday thoughts, where I'm going over what I'm seeing throughout the day. And the whole point of this is so that you can take your own trades and that you can learn by watching what I do in real time. All right, that's it for this one. Make sure you join the Elite Trader Funding giveaway. Remember, you gotta subscribe, like this video, comment on the video, follow me on Instagram. I'm gonna select a winner from the comments at random using a comment generator. And then I'm going to message that winner on Instagram directly to get your information. And then I'm going to have ETF set you up with the direct to funded account. So good luck to everyone, and I will see you all in the next video.